Hello everybody, Randy Patrick here. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. We got a lot of information today. Lots happened in this week. Today is Friday the 19th of July. News, ton of it, so we'll get to it now. But first off, obviously you saw that I created a new playlist, so that was my Game of Homes edition. We'll start doing some of that as time goes on here. It's not going to be really current event or news based. It's going to be more real estate theory, history, strategy, concepts, etc. So I wanted to sort of split that off as my channel grows into sort of that sort of venue, and we'll just keep this stuff for the news that we have a couple times a week. So again, more in-depth issues surrounding the marketplace. So again, as I always mention, people, please reach out to me if you want to talk about real estate strategy, investing, buying a house, selling a house, whatever the issue may be. I'm here to help. And if you're not already a subscriber, if you could please click that button on the bottom right of the video and subscribe. I really would appreciate that. And I do want to thank everybody for helping my channel grow. I hit another benchmark this week, so I do appreciate that. And again, it's more people that subscribe, gives me more opportunity to grow the channel and do more of these real estate videos. So today's topics: foreign buyers bail on U.S. real estate, housing starts and permits take a hit, Bay Area blues, investing in America, just some basic mortgage information which we'd like to cover, and top home seller gains for the past quarter. There you go. Well, big news this week was the information that came out from Realtor.com with respect to foreign buyers. So as I mentioned, it's buying people who are buying property in the U.S. from other countries. They have a lot of purchasing power, and that's actually dropping. So U.S. home purchases by Chinese and other foreigners plunged below 2012 level. The Chinese reaction to it from the largest Chinese portal for U.S. home sales as well too. So a lot of information out here. So when it comes down to it, it's really straightforward. Is that and we have early on our friend. So this is Bubble Kitty. It all depends on the time of day when I record the video. Sometimes she's sleeping, and oh, that's so beautiful right now. So there you go. You get to see cats in action right here. So anyway, depends on what time I'm doing this, is whether she's up or whether she's sleeping. So the whole point though is that, and we'll get ready now, okay? Because we got stuff to talk about here, sweetie. All right, sure, here she goes. Okay, cool. Off you go. So ultimately, and we break this down into two segments here with the buyers. So we have purchases, by resident foreigners, and we also have purchases by non-resident foreigners. So obviously, resident foreigners are people who are here legally, and they've bought homes before, or they're in the immigration process, whatever that is, and essentially they're buying real estate, but they're already on the soil. Then we have people who are not on the soil, purchasing from afar. And really, the difference is the purchases from all foreign buyers in the period between April 2018 to March 2019 plunged 36% from the same period a year ago and 49% from 2 years ago. So the numbers are 153 billion down to 78 billion, which was below the level in 2012. And with purchases by the Chinese buyers being the largest group, collapsing 58%. So we basically can see that we've dropped from 153 billion to 78 billion, so almost half. That's significant amount of droppage in foreign buying, which is certainly going to affect the property values. That's what's going on here. So again, resident foreign buyers about 60%, and non-residents equal about 40% of the buying pool. So that's the scoop on that. Where we have the issues is respect to the decreases. So China, which the report includes Hong Kong and Taiwan, was minus 58% decline in purchasing, which represents over 13 billion. The Canadians, who I sort of know a lot of Canadians because that's who I am, minus 58% as well to 8 billion. People from India down 12% to almost 7 billion. UK, so United Kingdom, down 60% to 3.8 billion, and Mexico down 75% to 2.3 billion. So essentially, that's a lot of buying power that's left the marketplace here. And when people look at certain locations like coastal cities, like mega cities on the West Coast, like in New York City and in Miami, that's where you're seeing the greatest hit. So the number of closings and the value of transactions, because a lot of these are cash transactions, just aren't there anymore. And that certainly helped prop up the market and drive market value, but it's not there now. So we can see it's down by half, which is some pretty substantial numbers here. So when we go down to why people buy in certain countries, and this is just taking the Chinese in particular. But their primary factors are education is a factor, and 83% of the Chinese who move overseas, so having a good education system and quality of education. Environmental quality, is a driver for 69% of the Chinese buyers. Food safety is a factor in decision to come to the U.S. for 57% of the buyers as well too. So we certainly see how lifestyle and I guess differences in where you're coming from, where you're going to, are certainly sort of paving the way here. So to me, a lot of stuff happening. So the top 5 destinations for foreign buyers, believe it or not, Florida is the 20% of all purchases by foreign buyers. People come to Florida, and obviously Canadian snowbirds like to go. 42% of Canadians buying in Florida. California, 12% of all foreign buyers. There you go. And Texas, 10%. Arizona, 5%. And New Jersey are 4% of all foreign buyers. So out of the foreign buyer mix, 47% said they would use the home as a primary residence. 41% paid all cash from the U.S. point of view, and 51% obtained a U.S. mortgage. So again, all cash buyers drive property up. That's just the way it goes. Excuse me. So 44% purchased in a suburban area, 76% purchased in a detached family homes or townhomes. The remainder purchased condos. Now, by country, Canadians, which are 48%, purchased as a vacation home, and 15% was rental. So the snowbird side is a vacation home. The Chinese, 37% purchased as a primary residence, and 28% as a rental. Indians, 75% purchased primary residence and 12% as rental. Mexicans, 63% of primary and 30% rental. British, 38% as primary and 29% as vacation home. So there you go. So you can see that there's a pretty significant demographic here. You got a lot of vacation home, rental, primaries, a little mix of everything. And I think when you take a look at certain cultures and where people are coming from, there's reasons why. Like if I'm taking the Indian population, a lot of the Indians who are coming who are living here are because they're working here in specific skilled fields. Canadians, as I know, because we were part of this back in the day too. We'd vacation down here, and vacation homes are being purchased first. They're obviously going to certain locations in the U.S. Clearly, if they're not there for part of the year, they want to rent it out, whether it's short-term release rentals, etc. So I know that, and again, in certain locations, when you buy a home, there's rental restrictions on certain condo units, certain developments, etc. So that's part of the process when buying vacation property as well too. So a lot of these things come into play, but it just goes to show when you take a look at it, the amount of money coming into the U.S. marketplace has been cut by half, roughly, of foreign buyers, which is significant, and we're going to see that kind of permeate through the value system as we go here. Moving on to housing starts. So building permits take a hit in June. So housing starts in June fell 0.9% month over month, which is a marginal decline from May's revised estimate. Information according to the U.S. Census Bureau. Also, building permits took the hardest hit in June. It fell to the lowest rate since May 2017. June's rate represents a month-over-month decline of 6.1% and an annual drop of 6.6% from the previous June 2018. The number housing completions fell to an adjusted rate, which was a drop of 4.8% from May and a 3.7% from June 2018 rate. So again, we're seeing on the new build side everything kind of dropping: completions, starts, permits, etc. Number of completed homes waiting to hit the market declined 4.8% from May, and it was also 3.7% lower than a year ago. So again, this is what's happening. This is again responding from Realtor.com and from the U.S. Census Bureau. So what we're seeing again is the fact that builders aren't building houses like they used to. They have cost issues, and buyers aren't buying for whatever reason. Could they be the reflection of the cost issues as well too? Now, the comments from all this, as we mention every video, is despite lower rates. So we have favorable interest rates right now, and we're not seeing sales take place, even though we're at really good rate structures for mortgages. So there you go. Going along with that, Housing Bubble 2 lost its mojo in the San Francisco Bay Area. House prices dropped 8%. So for the 9 counties, the median sales price dropped back to June 2017 levels. This, of course, is from information from California Association of Realtors. We take a look at this briefly. We can see that everywhere, sales volumes in the San Francisco Bay Area fell 9% in June. Wine County, the first to get us in the mood, basically fell 6.6%. Napa County, the median house price fell 4.6%. Silicon Valley, obviously with the IPOs that are going on there, I guess you could say. Let me take a look at that. I guess I don't have information on Silicon Valley. Wait a second here, folks. That's broken down to a bit, but San Mateo County, northern part of Silicon Valley, declined 1.8%. And then I think we have another area of Santa Clara that had a decline as well too. It fell 3.6%. So I guess there's a north and south point of Silicon Valley there. So there you go. So we're seeing this happen in the larger cities, of course. So but when it comes down to it, all 9 counties that are considered part of the Bay Area of San Francisco posting declines in sales and like home prices. So we're seeing some erosion there, which is interesting. Investors setting their sights on starter homes. So basically home buying in 2018 was the highest on record for investors. Investors purchased around 11% of all available homes that year. So that's the scoop on that, according to the chief economist from CoreLogic. Mom and pop investors grew from 48% of all investors back in 2013 to 60% in 2018, and they are focusing primarily on starter homes. So probably that, and again, for me, a starter home was a 3-bedroom, 2-bathroom, 1,000 to 1,500 square feet home, which is reasonable. It's good for families to get into if they want to purchase, and also it's your typical rental home sort of configuration. So that's what they're actually purchasing. That's the majority of purchases. Obviously, that's going to be more in the affordable home market, where either they can sell it, they do fix and flips, or these are rental homes they can rent out to the average family. So that's what's going on, which is kind of cool. So again, I guess you could say we're going to see more of that as time goes on, but we'll see how the prices affect that. Because again, do you want to buy a property that you want to rent out at the highest market point as far as price is concerned? So if there's a bit of a depreciation, some price fluctuation, you're hurt with respect to your value and your ability to sell it, and also rents tend to trail home appreciation well too. So appreciation of homes drop, rent rates drop as well too. So we'll see. That's not always a good thing to buy at the height of the marketplace. Now, Bankrate did a survey, and also Americans are setting their sights on real estate investment instead of stock. So maybe the stock market is considered too volatile for most people, but the study found that 31% of respondents would invest money they didn't need for more than 10 years in real estate, where only 20% would invest in stocks. And we're seeing that the millennials, our generation, are among the most likely to invest in real estate, with 36% of millennials stating that they would turn to real estate for a long-term investment, compared to 30% for baby boomers and 31% of Generation X, or 23% of the silent generation, which I don't know what that is right now. Maybe that's the next generation after Generation X, I guess, here. But the point is, again, we're seeing a resurgence in thought process that real estate holds value and has better upside than stocks. There you go. Moving on to mortgages now. So, of course, every week MBA, which is Mortgage Bankers Association, tells us what happened the previous week with respect to mortgage movement. So refinance applications heat up as purchase applications continue to cool. So again, we go back down to despite low interest rates. So what do we see now? More people opting to refi, less purchase applications. So if there's more refining going on, that means there's less homes coming on the marketplace, as far as I'm concerned, for home purchases. So and as a result of that, there's less purchase applications hitting the mortgage people as well too. So we had let's take a look at here. Mortgage applications fell 1.1% from last rate. And we take a look at the detailed breakdown. Said the refinance share of mortgage activity ticked up to 50% from the previous week of 48.7. ARM, adjustable rate mortgages, share fell to 4.9%. FHA share increased from 10.6% to 10.6% from 10.1%. Veterans VA loans moved backwards from 13.2 to 12.9%. And really, when it boils down to it, that's what we're seeing here. So you see that when I see FHA and things like that growing, I know that's more lower down payment and higher debt to income ratio buyers that are coming into the ball game. So again, just keep that in mind. So again, but ultimately the number here is less mortgage apps for purchases, higher mortgage apps for refinances. And just to sort of go along with that theme here, Quicken Loans posted its best ever quarter. So excuse me once again here. We see that Quicken Loans for the quarter, April, May, and June, recording originations of at least $10 billion, which is kind of wild. So that's huge. So basically, that's big totals for these guys. And same thing, they're seeing refis. They're also seeing purchases, but a lot of refis. Now, clearly, the Quicken Loans is a non-bank. A little different than the Wells Fargo's, Bank of America's, your Chase banks out there. So a lot of the Rocket Mortgages is the Quicken Loans product, etc. So they've made it very easy for people to go in off their phone via an application, going off their computer, to get pre-approved, to look at rates, to figure out what it would take to refi a property. And the easier it is, they're going to see more of that activity. So there you go. So Quicken Loans posted its best ever quarter. Doesn't surprise me. So low rates are going to help certain segments of the population, and the non-bank segment is obviously reaching out and marketing and doing their best to capture that when you see that they're having their best ever quarters, et cetera, et cetera. So very interesting. So which brings us to Adam Data Solutions released yesterday their Q2 2019 home sales report, and they felt that the spring season was stronger than usual, with the biggest quarterly gain in 3 years. The reason they say that is because seller profit margin jumped at one of the fastest rates since 2015, posting new post-recession highs. People who sold in the second quarter of 2019 realized an average home gain since purchase of $67,500, which was up from a gain of $57,700 from Q1. And so that's a gain from quarter over quarter. And obviously, if you go back a year ago, the gain in 2018's quarter two was only 60 grand. So certainly see an average of 33.9% return as a percentage of original purchase price. So there you go. So shows that people who were selling this past quarter did well. And so these guys, they go back and they look at the numbers, etc. So we took a look at, I'll give you the top 10 list in a second here, but when they talk about home ownership tenure, so longest you've been in the house, it's roughly 8 years. So the average time that people have been in the house since they bought it to and they sold is still roughly around just slightly over that 8-year mark. So we're seeing that as remaining kind of consistent. So if you take us back from 8 years, you go back, it's 2019, you go back to 2011, and what do you see? Then you're seeing the people probably bought at the trough. They bought in that low value time, which is the best time to buy. Peaks, crashes, you got the trough, you're buying here. So they're getting a great opportunity. They're growing their equity and they're cashing it right now. So I guess the right time to buy and sell. As far as I'm concerned, that's your deal there. Let's go over the top 10 locations. So these are the top 10 home seller gains by what's MSA, which is really the metropolitan sales area. So the number one location, which is huge gains, and I'll post this for in the community section so you can take a look at this chart. So San Jose, Sunnyvale, Santa Clara was number one. San Fran, Oakland area number two. Santa Rosa, California number three. LA, Long Beach number four. So the top four were California-based. Boulder, Colorado was number five. Seattle, Tacoma, Bellevue, Washington number six. You've got Ventura, Thousand Oaks, California number seven. Honolulu, urban Honolulu area number eight. San Diego number nine, and Boston, Cambridge, Newton, Massachusetts number 10. So when you look at it, you got 1, 2, 3, 4, 5, 6. The top 6 out of 10 top seller gain locations were in California. And if you take a look at some of these seller gains, they are quite significant. In some locations in California, there's multiple hundreds of thousands of dollars on their gain. Now, when we average out the quarter across the country, we're looking at a $67,000 gain. But when you take a look at some of these California locations, the numbers are astounding. So if you bought at that good time and you sold today, you did pretty well on your sale. So I can see why a lot of people were holding out, because the numbers are huge. But even if there's some slight erosion there, if you bought in that low point, the trough point, last housing crisis, you're doing okay. there's no doubt about that there. So really interesting to see that. So that's the scoop, everybody. A lot of gains happening in certain parts of the country. Will we start to see those gains slow down? Well, we hope, if prices are eroding. So it's kind of funny. Don't forget, this is Q2, so we're seeing April, May, and June. But we've also known that we've seen price erosion sort of May, June. So that's starting to pick up now too. So I do think that these numbers will start to slide. And again, we're looking at the price erosion on month to month, and this is a quarter by quarter look as far as gains are concerned. So a little more inflated because picking up a earlier quarter when we didn't see as much price erosion. So that's a scoop on that. So what's my takeaway from today? Well, foreign buyers are not here anymore. They've reduced their footprint by half as far as what they're buying, which means we're going to see price erosion because a lot of those cash purchases aren't propping the market up. So that's certainly happening. I can tell you that foreign buying is, there's a lot of factors that go in foreign buying. It's is it done for immigration purposes? Yes. Is it done for just pure enjoyment, owning a property, different country, to vacation purposes? Yes. Is it done for what I call flight capital reasons, where people are looking to take money out of the country because they feel the political or economic climate's unstable and they want to park it someplace where it's going to at least be safe for them? That's part of the reasons as well too. So there's going to be a number of, like, a mixture of what goes on when somebody invests outside of their home country. So just keep that in mind. So again, scoop for today. So again, thank you for the views, thank you for the comments, and again, if you haven't subscribed to my channel, please help me grow and click that button and subscribe. I do appreciate it. For those of you who I've spoken with, let's make sure we keep in touch. I do have people that I'm trying to connect with, so we'll certainly keep trying to set up times. As I always mention, the best way is to email me where I can respond, I can see it, then we can set a time to talk and we can figure out what you want to do. I do think that there certainly are some opportunities with respect to pushing price down on properties. The sleeper, which we're going to talk about in some of the playlists I'm going to get involved with now, will be on the pre-foreclosure investing, which I think really that's the opportunity where people need to discover. I can tell you that where I live, I just pulled my foreclosure filing stats yesterday, and already in my local area, what was last year's numbers, I can see that where we are as of June 30th, we're already projecting to blow by those numbers again, and that's increasing from the previous year, which increased from the previous 2 years as well too. So as much as we think that the market's great, and it still is pretty good for home appreciation, even the deceleration of appreciation is happening right now. We're seeing price erosion. We're seeing higher foreclosure filings. Some of the things that I wanted to mention with one of my previous videos, and I saw that with doing some analysis this week on foreclosures, is that lenders are taking property to foreclosure a little faster now. So they've realized that they can get paid quicker. Why mess around? Let's move it along faster. So they're deploying and implementing systems and processes and resources to do that. We have to be aware of that. But again, an untapped market is what I'm trying to get at here, and it's something you guys should look at to see if it fits what your needs are. So having said that, appreciate the time once again in the video. I will produce some more of the playlist stuff in the coming few days. But having said that, have a great weekend, and we'll look forward to speaking with you next week. Thank you.